Welcome to HydroGien and our February 2026 capital raise presentation. Mining, remote industry, and defense operations don't fail because they lack equipment. They fail because energy logistics fail. These include diesel transport, diesel storage, diesel security, downtime, and cost. And as fleets electrify, the bottleneck shifts to charging queues, outages, and grid upgrades. HydroGien exists to solve the common constraint across all of it: reliable energy at the edge, without fragile supply chains. HydroGien is an on-demand hydrogen and power platform designed for remote operations. We monetize through skid sales for delivery of relocatable hydrogen electric power on demand and on-site. Additionally, we monetize operating leases for HydroGien fuel saver kits. Thirdly, HydroGien earns income from HydroGien Fast Swap hydrogen on-demand cartridges. The HydroGien cartridges ensure a better fuel burn. While all fuel in a mining truck engine is technically injected to be burned, a substantial portion, often estimated at 30% to over 50%, of the energy content in the diesel is not converted into useful movement, wasted through incomplete combustion, idling, and inefficiency. HydroGien solves this problem with the HydroGien truck installation kit and fast swap cartridges. We're raising $5 million at an indicative $20 million pre-money to scale pilots into repeatable deployments. This is a commercialization first round. Our investor thesis is simple: skid leasing, producing asset-backed, investor-grade returns with a base case return band of 10 to 20% and upside 30 to 40%, where utilization and performance fees apply. In mining, even modest diesel reduction produces large, measurable savings, and we can contract around those KPIs. Defense and autonomy tailwinds are accelerating demand for endurance and logistics simplification, especially for maritime autonomy and distributed operations. In remote mining and infrastructure, diesel is effectively a supply chain with compounding costs: transport margin, storage risk, theft exposure, inventory buffers, maintenance, and inefficiency. Now add electrification. Megawatt charging brings a new constraint: charger downtime, queuing, and grid upgrade timelines. That's lost utilization on the highest value assets on site. HydroGien generates hydrogen at point of use from aluminium and water, delivered as continuous wire feed or cartridges. The design intent is deployment reality: containerized, towable, modular, and hybrid ready. This matters because we're removing the highest friction part of hydrogen adoption: bulk storage and logistics complexity. We focus on control, safety architecture, and metered performance. Our product line is structured around enterprise procurement. HydroGien's skid sizes range from small generator size to larger pallet-sized units for remote loads, microgrids, and charging buffers. With HydroGien, revenue is a stack: hardware for sale or lease, consumables, service, plus performance pricing, per kilowatt hour delivered. HydroGien on-demand skids are deployable like a containerized genset, but fueled by water plus aluminium feedstock. These hydrogen electric skids are designed to reduce diesel logistics exposure while keeping operations stable. This is where deals get signed: measurable savings. A representative 250 kilowatt class load at remote delivered diesel shows a baseline diesel spend of $1.67 million per year for the same energy delivered. When hybridization reduces diesel per mining truck by 15%, that creates $251,000 per year of gross value. In the upside case, at a 40% diesel reduction, the gross value is $670,000 per truck per year, leaving $487,000 net per truck per year after the same lease budget. That's why leasing works. We can capture a share of value while still leaving the customer better off, auditable, and contractable. We've structured leasing to be financeable and diligence ready, 60-month term, with a 20% residual with return bands. For example, an HydroGien skid leases at $14,000 to $19,000 per month, in the base band, with upside bands driven by higher utilization and performance fees. This converts customer capex to predictable opex and creates asset-backed cash flows with metered KPI uptime, safety events, and verified diesel displacement. Mining is the fastest path to scale because the fuel burn is enormous. We offer an integration kit at $59,000 per truck, plus consumables and monitoring, with optional support at $1,000 to $2,000 per month per truck. If a truck spends $2 million per year on diesel, the savings are immediately material. A 10% only reduction delivers savings of over $206,000 per truck per year. And at 20% fuel savings, each truck saves around $413,000 per year. And at fleet scale, upside cases compound quickly. This is why our contracting model is KPI-driven. The mine only pays in a way that remains value accretive. For battery electric fleets, the economics are dominated by utilization, queuing, charger outages, and infrastructure constraints. HydroGien skids can act as a deployable buffer, peak shaving, redundancy when chargers go offline, and bringing power closer to where trucks operate. We don't sell theoretical kilometers. We contract on measurable operational value, hours of avoided downtime, and megawatt-hour delivered at the edge. Commercially, this fits perfectly into lease plus metered energy or a verified savings share model. Now to defense and autonomy. HydroGien is not a weapons developer. We are an endurance and sustainment platform. Australia has announced a $1.7 billion defense grant to locally build Ghost Shark autonomous undersea drones, with dozens entering service from early 2026. At the same time, AUKUS Pillar 2 emphasis is increasingly focused on autonomy, alongside long-range strike and integrated air defense. These programs make endurance and logistics simplicity first-order constraints, especially across Australia's vast coastline. HydroGien enables concepts like persistent coastal patrol, environmental sensing, and early warning with autonomous water drones, because local water access changes the sustainment equation. Any defense pathway is governed by approvals, end-use controls, and partners. But the tailwind is clear. Autonomy needs endurance. Our go-to-market is 3 wedges, 1 platform, remote power skids, start with constrained use cases, meter everything, yield, uptime, maintenance, safety, and convert pilots into multi-skid contracts. Mining truck retrofits. HydroGien targets the highest diesel burn fleets first, prove measurable reduction, then roll out across sites. Defense and autonomy modules. HydroGien starts with dual-use ocean monitoring and endurance prototypes, partner through approved pathways. This raise is execution-focused, with safety and certification, clearly defined and metered pilots, manufacturing readiness, and consumable supply chain scale. Within 18 months, HydroGien aimed to complete a defensible safety case with 2 to 3 enterprise pilots with audited KPIs, together with the first commercial leasing deployments. This will be followed with a dual-use autonomy prototype aligned to endurance and coastal monitoring. We are raising $5 million at an indicative $20 million pre-money to commercialize skids, validate mining truck savings, and lock repeatable leasing and consumables deployments, while building a defense-adjacent endurance pathway through compliant partners. Here is the ask. If you invest in seed stage or deep tech with real asset-backed unit economics, we want you as a lead or co-lead. Here is the next step. Request the data room, review the IM, and book a 30-minute due diligence call this week. If the fit is right for both of us, we will reserve allocation and move to terms immediately.